Yo, can you hear me? I can't see myself. Right. Yo. Hello, hello, hello. What I've tried to do is, obviously I'm in an airport lounge right now. What I've tried to do, I've got my Bluetooth mic on here. I don't know if you can see it. I've got some noise cancellation on. I'm trying to keep it as quiet as possible in the background noise. Hopefully you can hear me properly. I've got the chat open here on my phone. It's all good. Perfect. Right. Yo. Let me make an announcement on Discord and then we're good to go. I've got the chat right here. Let's see some W's in the chat, guys. Let's get some W's in the chat. I'm showing you how to scale to 10K a month from trading. Let's get it, guys. Come on. Yo. We are doing a giveaway today, so keep your eyes out for that. Right. Perfect. We're good to go. We are live right now on YouTube. Click the link in the bio. See you there. Right. Right, let's get to it. Let's get to it. So, the giveaway will be done at the end of this stream. Now, this is a bit of a weird stream. Obviously, I'm in an airport lounge right now. But, thank you. But, usually I'm at home. I can see the chat. I can see myself. So now how the stream's running, I know it's running smoothly. But I can't at the moment. I've just got my laptop right here. So, we're going to see how it goes. Like up the stream if you haven't already. We're gonna get started very, very soon. And now I know I do a lot of lectures. I do a lot of live lectures and I do a lot of teaching, and it can sound quite repetitive. It can repeat itself quite a lot. The truth doesn't change. But I've tried to find a way to reword it. But also there's a lot of new things here that I haven't really shared before. Especially on YouTube, live for free. So make sure you're watching, like the stream if you haven't already, and the giveaway will be done at the end, all right? So, right. Perfect. Just double check how the stream's running. Perfect, guys. We got 21 people here. It's going nicely. We're about to get started. Make sure everyone who wants to be here is here. We're gonna get started in about 10 seconds, guys. So get your notepad out. This is not going to be a dopamine kind of stream. I know in previous live lectures I've made it quite fun and engaging. This is slightly different. This is going to be direct truth, direct knowledge, direct source, whatever you want to call it, straight to the dome. So make sure you got your notepad out, making notes and that. And I think we're going to get started now. So as you can see by the title already, this is how to scale to 10K a month from trading. An A to Z guide from setting up your charts to picking a prop firm. So we're literally going to discuss everything we need to discuss today, from setting up TradingView to how to pick the right prop firm, how to pick the right prop firm based on, certain things that we're going to get into in a second. So yeah, let's get into it. If there's any issues, any questions, anything like that, ask in the chat. I can see the chat right here. Like up the stream if you haven't already, guys. And yeah, the giveaway, we're going to give away some funded accounts at the end. So stick around for that. And I've got something else coming for you as well, which is pretty cool. So yeah, which is also free. So stick around, notepads out. We're getting started right now. So the first thing we need to discuss is the software you need to get started, right? Now there's a few different things. The first thing we're going to discuss is TradingView. Pretty self-explanatory. I think, there's not really much else you can use. I think that is literally the only chart that you can use, chart and software you can use. But anyway, TradingView. TradingView is the chart and software we use to analyze and mark up the markets because it's clean, fast, gives you every tool you need without overcomplicating things, right? It says it here. You can read it, I'm sure. The goal isn't to fill your screen with indicators. Now, a lot of people, I'm not saying they don't work, but I'm saying, if you want to be able to rely on yourself for your money instead of just indicators and signals, you need to stop using them. And also, if you're trying to combine different strategies, different indicators, and you're just experimenting because you think each one works, it doesn't. You have to learn how to read it properly, not just follow along blindly. So anyway, we're not gonna do a rant about indicators, but TradingView is the first thing you need, right? Pretty self-explanatory, so let's move on. Now, a lot of people, and when you set your charts up for the first time, it will be green and red and like a bit of a weird looking color with like the volume bars at the bottom. Get rid of all those. This screenshot right here is exactly how your chart should look. Pretty clean, not really much in the way of like colors and, you know, fancy dopamine stuff. It's pretty just gray and black, colorless really. The only color is green, right? So that's how it should look. Pretty simple as well. You can see there's a lot of like liquidity and all that stuff. There's a lot of highs and lows, a lot of fair value gaps here, but we're only focusing on the real important stuff. That's how you should be drawing yours as well. So get yours to look like mine. There is a guide, you can figure it out yourself. I also have a guide on YouTube if you want to go and watch that after the stream. But yeah. Now, MetaTrader, obviously that's pretty self-explanatory as well. That's where you're going to be entering your trades. MetaTrader is the platform you use to place trades on. So we chart up on TradingView. So we mark out the trades we want to take. Then when we find one we want to take, we obviously go into MetaTrader. Now, if you're in the US, it might be slightly different because MetaTrader and prop firms, they don't really work well together for US traders because of, you know, the whole financial authorities in America. Now, if you're outside the UK, or sorry, the US, it's pretty fine. If you're in the US, there's other ones like TradeLocker and stuff like that, which there's an app for as well. But yeah, MetaTrader, something like that. You need something to enter your trade on. Now, another thing we're going to discuss today is FX Replay, another website. Just search that up on Google, whatever, and you'll find it. It's for backtesting. Now, the reason I recommend this instead of TradingView for backtesting is simply because on TradingView, you can only really see the close of the candles. You can't see like, you know, it says it here really, you know, you could be backtesting 1 p.m. on a Thursday on the 5-minute chart, switch to the daily, and TradingView will show the full closed candle, not the actual 1 p.m. on the Thursday, right? Whereas, you know, FX Replay solves that by letting you move through price as if it's live. Pretty straightforward. Use FX Replay for backtesting. Forex Factory, pretty self-explanatory again, but we need to discuss this first because this is the basic stuff for the noob traders. After this, we're going to be getting into some, you know, actual technical analysis and stuff. Now, Forex Factory is used as basically, it's like a calendar. Now, I know Trump and other things can kind of affect it and they just kind of come out of nowhere that you're not really expecting them. But there's some pieces of news that, you know, you can't expect, like CPI and PPI and all that kind of stuff. So with that, we have a calendar on Forex Factory that tells us, you know, this is the news that's being released, this is how important it is, this is what it is, and, you know, previous forecasts and previous releases. And you can just kind of use that to avoid getting caught in news, right? That's Forex Factory, forexfactory.com. Again, by the way, guys, these are pretty much all websites. The only app was MetaTrader, which you can actually get on your laptop as well, or your computer. Now, Financial Juice, as I mentioned with Forex Factory, it only shows things that are already like forecasted. It only shows things that are already scheduled, like CPI and PPI. Whereas sometimes Trump might speak, or, you know, there'll be some surprise thing, some move in, you know, with war or something like that. Financial Juice covers all of that as well. So this will show you, there is a calendar feature, but it's not as clean as Forex Factory, but this will show you like the important stuff that gets released. So sometimes on Forex Factory, you'll see a speech happening. So you'll see like Donald Trump speaking or Jerome Powell speaking. It doesn't actually show you what they're saying, right? Whereas Financial Juice will show you the headlines. Now, I'm on a laptop today. I'm getting used to actually working on a laptop because obviously I'm traveling. Now, I would show you some examples otherwise, but again, as I said today, as I said at the start of the stream, this is pretty much just straightforward stuff to you. Now, this isn't like super basic. I'm not going to be showing you how to set up TradingView, set up Forex Factory and that kind of stuff. If you want to do that, you can go and research that in your own time. This is basically telling you, this is what you need to know. This is what it is. Go and find it, go and learn it, and apply it all, right? Especially with the software. So Financial Juice, that gives you like the headlines and stuff like that as they show up. Now, lot size calculator, again, something else that we're going to be discussing today. Lot size calculator, this is basically to just plan your risk. Lot size calculator just shows you the size of the trade that you want to get into, right? That's it. Because as I'm sure you know, you want to be risking, you know, pretty much like 1%, 2% at most if you're going for a funded per trade. You can't really just guess that unless you have an idea of the, you know, the market that you're trading. So use lot size calculator, my FX book, just search that up on Google and it'll pop up right there. It's pretty straightforward. I think there's a guide on my YouTube. There should be a guide. If not, you know, it's pretty self-explanatory. You can search up a guide yourself. Now, X, Twitter, this is something we haven't really discussed before, but Twitter is basically It's like Financial Juice, but better. There's a lot of headlines, a lot of things that, you know, Financial Juice might not even cover. I've been using this recently and it really does help. So yeah, use that. You know, it's one of the strongest real-time tools for fundamentals when it's set up properly. So you might have a personal account, you know, you might have your own hobbies and interests and stuff like that. You might have a personal account which is tailored to that kind of stuff. What I'd recommend if you have that is just set up a new one. Just set up a new one, you know, under like a second email or something like that. Set one up on there, and then you can basically just optimize it. So, you know, follow like, you know, CNN if you trust them and stuff like that to basically give you the news. Engage with those accounts, and then engage with crypto accounts, crypto news, all that stuff like Market Whales. That's a good account. Just engage with them, just like their posts, you know, comment on them and stuff like that. You'll get recommended more ones as well. So this is actually pretty cool. If you have a personal, you don't open a new one, you can do that on there as well. But recommend doing that because it really does help. Now, Notion, pretty much, I think this might be the final thing that we need to focus on in terms of software, and then it gets a bit more interesting from here. But Notion is what we use for journaling. It's pretty straightforward. Now, I know a lot of people use spreadsheets and stuff, or you might even write it down. Both of those things have a very low ceiling. Now with Notion, yeah, especially for the course members, you guys will know there's like a dashboard that we offer as well. So that will have like trading plan, psychology journal, an actual trading journal. It'll have separate sheets as well, which is similar to spreadsheets, but again, higher ceiling, slightly bigger learning curve at the start. You know, when I moved over to these or this, it was, you know, pretty difficult at first, but if you're determined and, you know, you can stay long-term and believe that there is an upside to this higher than the ceiling on spreadsheets, you'll actually be able to track a lot more things. That is it. The software out the way, the boring stuff out the way. We can actually get into it now, guys. So as I said, I'm not gonna be able to show you examples like going onto the charts or anything like that because I'm on a laptop. It's still getting used to working on one. Usually I have multiple screens, but yeah, fundamentals, let's discuss that. So fundamentals, again, pretty straightforward. They're half of trading, you know, it's basically just the news that's being released, but they are quite important. They make up probably like 70% of the trading, you know, market moves and stuff like that. Very important. One half of trading, you know, large price expansions are usually driven by data releases, central bank decisions, CPI, PPI, Trump speaking, or Jerome Powell speaking, or some other guy speaking, right, who's really important. And that is it, like fundamentals, right? Technicals, technical analysis, the other half of trading. That's what we use for precision and exact entries. So when we discussed TradingView, marking up your charts, you're marking up your charts using technical analysis, right? Then you're checking Forex Factory, you're checking Twitter, you're checking X, or Financial Juice for the fundamentals. You pair them both together. Do never rely on one of them. Use both. And that is it. That's the boring stuff out the way. Liquidity, right? Liquidity. Liquidity is every single high and low on the chart, right? And a high or low is simply created when price retraces during a move. So if you see 6 green candles, then 1 red candle, and then price continues up again, the low of that red candle, that's a low. We've left behind a low there. Although we've just like 1 candle, doesn't really look like a retracement. It is, and that's a low, right? Now, when we have groups of lows, you want to go for the lowest one. So if we have like 5 candles in a row, like an accumulation or something, for example, and there's like a massive bottom wick on one of them, use that as the low. That's it, okay? Now, with liquidity, these levels matter because price is constantly going up and drawn to them, right? Or down, drawn to them. So instead of seeing random candles, you start seeing magnets, basically, that price will be pulled towards. Now, this is also paired with fair value gaps, which we're going to discuss right now. So fair value gaps are formed by 3 candles in a row where the wick of the first and third candle do not overlap. So there's a gap there, right? Leaving a visible gap through the middle candle. This gap represents an imbalance where price moved too aggressively in one direction. So what the market does is it returns to fill those gaps more often than not, and then continue. Or you can close through it and disrespect it, which is something else we're going to discuss today as well. But yeah, liquidity and fair value gaps, highs and lows, and then gaps left in the market by a move of 3 candles. Now, the direction of the first and the third candle, I don't know if you want to have your charts up whilst I'm explaining this, by the way, because I know this is literally just me talking to you, but I would show you some examples, but I can't. It's pretty hard for me to navigate through both without messing the stream up. So yeah, fair value gaps, liquidity, I don't know if you want to search up examples of them, but again, pretty straightforward stuff, right? Now, ERL and IRL is the way you combine those two things. I haven't really seen many videos discussing this, but it's super, super strong. Like honestly, I'm pretty proud of it because like I haven't seen anyone discussing this, but you know, we use this in the course for our bias. I use this every day for my bias. I even just use it like when I'm entering a trade, I use it for the logic on entering my trade as well. It's so effective, and you know, it works quite a lot. What is it? ERL and IRL is basically, ERL is external range liquidity, which is essentially the highs and lows where stop losses sit, liquidity rests, while IRL stands for internal range liquidity, which are fair value gaps, right? Inside the move. And what price does is it goes from ERL to IRL and then back to ERL from that. So that means it goes from highs and lows back to fair value gaps, and then from a fair value gap back to a high or a low, right? Now there's two ways that that can happen. It can either go back to the fair value gap after taking out a high, for example, respect it and then continue up, or it can go back to the fair value gap after taking out a high, disrespect it by closing below it, and then continue to the next form of liquidity, which would be the low, which is ERL and IRL, which is ERL again, right? Again, pretty straightforward stuff, but it's really effective. Now, if you're looking for a guide on this, I recommend looking on my YouTube. There's tons of guides, watching one of the streams. Again, it's literally so straightforward. It's just liquidity and fair value gaps and nothing else. Right, quick little break here, right? Let's do a giveaway. Let's give away a funded account, right? What we're gonna do is we're gonna like up the stream right now and spam W in the chat. I'm gonna pick someone. Now, it's very important that the person I pick, you need to DM me on Discord, just saying, you know, you won the funded account. I guess there's not really much else you can say, but let's get some W's in the chat, guys. Come on, let's keep this chat active. I know this might be boring for some people, but it doesn't mean the value isn't there, right? Let's get some W's in the chat. We're gonna pick a random person to win a funded account. I've got my chat up right here. Right. You know the routine, guys. You know the score. So I've got my phone right here. This is me looking at the chat, okay? I'm gonna look away, and then I'm gonna look here, and the first name that I read is gonna win a funded account. So just spam W, like up the stream if you haven't already. You gotta make sure you're liking the stream because we want proof that you've liked the stream and you've subscribed as well before we give you the account. Spam W, right? We've got 10 seconds, spam W, and then we're gonna look away, look back, and pick a winner. We're giving away more than one, by the way, so stay tuned. Right. Keep them coming, guys. 5. So remember, this is me looking at the chat right here. I keep my phone here so you can see me looking at it, right? This is me looking at the chat. Looking away. 5, 4, 3, 2, 1. The first name that I read is going to win a funded account, and all you have to do is DM me on Discord. Mr. 1989 Max. Mr. 1989 Max. Don't know if you can see this. Mr. 1989 Max. Message me on Discord, bro. You've won a funded account. You've won a funded account. Like up the stream, guys. We're gonna give another one away soon. But Mr. 1989 Max, message me on Discord. Send me a screenshot of your comment, and that's pretty much it. That's all you gotta do. Right, now let's move on. Got a bit more energy in the chat. I know that this might be a bit boring, but it's really important you make notes and listen, right? So, daily bias. What is daily bias? Now, daily bias is it's literally, all we're adding into this is time frames, right? It's ERL and IRL, and we're literally just adding time frames into this. So daily bias is simply applying the ERL and IRL concept to the higher time frames so you know the overall direction before you ever think about entries, right? You check the daily, 4 hour and 1 hour, and on those time frames, this is exactly all you have to do, right? Listen, this is exactly what you have to do to find your bias. So write down the time frames, daily, 4 hour, 1 hour, and this is all you have to do on every single time frame. Check the most recent high, check the most recent low, check the most recent fair value gap, and check the most recent sweep on liquidity. It is literally that easy, right? 4 instructions, write that down, And that is how you find your daily bias. It's that easy. Now, I'm gonna ask a quick question in the chat to make sure you're listening. It's very straightforward. If we take a high on the daily time frame, what's the bias on the daily time frame? Comment it in the chat right now. What is the bias if we take our high on the daily time frame? What's the bias? There is a slight delay. There we go. Exactly, right? It's that easy. I don't think anyone's gonna get this wrong. Yeah, exactly right. Everyone's getting this. Nice. Exactly. Bearish. That is literally it. Very straightforward. Just checking you're still here. So, again, I know this can get boring. Let's move on. Daily bias is literally going to the daily, the 4 hour, the 1 hour, looking for the high, the low, the fair value gap, and the sweep. Now, if the daily and the 4 hour, let's go back. If the daily and the 4 hour are mixed, so the daily is bullish and the 4 hours bearish, then you go to the 1 hour and just check there, right? And then it'll be 2 out of 3. So daily's bullish, 4 hours bearish, 1 hour's bullish, bias is bullish. It's that easy, right? Now, AMD. AMD stands for accumulation, manipulation, and distribution. It's the cycle price repeatedly moves through to create and then take liquidity. Accumulation is the consolidation phase where price moves sideways, as you can see by this image right here. The orange box, that's the consolidation, right? Price is moving sideways there. We're getting liquidity on the highs and liquidity on the lows. And then the manipulation is literally just when price takes one side of that. It's the first close outside of that range. So if price is going sideways and we push up and close above it, what's that? That's a manipulation, right? And the distribution is the reversal of that move. So that's the blue box you can see right there where price moves to the downside with that massive candle at the end. That is the distribution. That's the type of move you want to be able to catch, right? You don't want to get caught in an accumulation or a consolidation. You don't want to get caught in a manipulation, which is a fake out. You want to catch that distribution down, right? And more often than not, we're able to do that simply by focusing on these cycles. So if price, goes sideways, closes above, we expect to distribute down. If price goes sideways, closes out of that range below, we expect price to go up. It's that easy, right? And the reason this happens, now, I'm not saying this is 100% true, but it works, right? It doesn't really matter if it's true or not. It's a way for us to wrap our head around it and understand it. The idea is the big banks and stuff like that, they need to fill their positions, right? So they might want to buy, let's say 600 lots, but there's only 500 lots being sold. So if they want to buy more than what is being sold, there's a deficit there, right? Or there's a hole there that they need to fill. So they need to basically make more lots be sold. They need to make more people sell, right? And in this case, they wanted to sell a lot, so they waited for people to buy. Price goes sideways, they push price up so everyone buys in, and then they enter their big position, right? And they sell, and then price melts to the downside. Our job, I send you a message to Discord and Instagram, Josh. No worries, Mr. Max. We'll have another winner very soon, but we'll get back to you just after this stream finishes. Now, where were we? Yeah, right. That is literally AMD. That's how it works. That's what it is. And your job is to catch that big blue box, that big distribution move. And yeah, I mean, once you're aware of the cycles, it does then become pretty easy. Like, it's literally a continuous cycle. Like, if you look to the right after that distribution, you can see price just goes sideways again. Another accumulation. It's a repeated cycle, right? Now, IFVGs, if you look to the left, you can see an IFVG there. That's literally just a fair value gap, right? So we form that with 3 candles, as you can see with that gray box there. The black candle, the blue candle, the green candle, and then the green candle again. That's a fair value gap that was formed. Now, an IFVG, or an inverse fair value gap, is formed when a normal fair value gap fails and price closes back through it, showing that the original direction has been rejected and a reversal is likely to happen. You typically give it around 5 to 7 candles, so the fair value gap takes 3 candles to form, right? After it's formed, it's then like 7 candles right? It's then about 7 candles after it's formed for it to inverse, right? So, I mean, if it takes 8 candles or 9 candles, pretty much invalid. If it takes 4 candles or 5 candles, it's valid, right? Now, you typically want to enter in, like, you don't really, you just enter when it closes. That's it. You don't typically, it's just literally 100% of the time. When it closes underneath the fair value gap, like this example, you take a sell position. Now, if you look at this screenshot a little bit, I know it's a very small screenshot, but if you look to the left of that slightly, we did accumulate and then we pushed up with the manipulation, right? And then that big move down, that's the distribution. So we accumulated, we then manipulated up, and then we formed an IFVG to show us that we are now going to reverse and flip back down. And then what did we do? We melted back down. That is how AMD and IFVGs work. So you use them together because an IFVG, as I said here, it shows us a reversal. Our job is to wait for the manipulation and then catch the reversal. So if the IFVG shows us what we're looking for, you know, it's pretty much they fit each other perfectly. It's, you know, it's literally perfect couple, right? Now, the entry model, pretty straightforward. We've gone over the bias, we've gone over AMD, and we've gone over IFVGs. It's literally just discussing the timeframes now. Now, after this, I'm going to be showing you guys how to pick a funded account properly, right? A lot of people just go through like the biggest one they can find, or the cheapest one they can find, or one that someone just randomly recommends to them. But what I learned when I first started getting funded was don't put all your eggs in one basket. Now, I don't know if anyone's heard of the Funded Trader, but I was funded with them. They shut down, and they reopened after, but they shut down. I lost all my accounts, right? Then I went to One of One Funded, did the same thing, and then as I was with One of One, the Funded Trader opened back up, and then One of One shut down. How mad's that? But yeah, you know, you want to go for a few different firms. Now, if you know how to pick the right firm, you can avoid that thing. You can avoid getting any account lost due to a prop firm closing, right? Most of the time, unless you're going through every firm. Now, we're going to discuss that very soon. The entry model is literally just stacking everything we've just discussed into one thing. So it's the daily bias using IRL and IRL on the daily, the 4 hour, and the 1 hour. Then it's going to the 5-minute time frame. Make sure you're writing all this down. It goes to the 5-minute time frame. Look for the accumulation. So you go to the 5-minute time frame, wait for a clear consolidation, you know, like not random candles, just sideways price action, an actual range where liquidity is building. During that consolidation, you want to wait for a fair value gap to form as the manipulation starts. So as that first candle closes outside of the accumulation, you want to start seeing a fair value gap form. Because remember what we said, the manipulation is obviously a fake out for us to distribute in the opposite direction, aka reverse, and the IFVG shows us a reversal. So you want to look for the manipulation to form the fair value gap that we are going to disrespect in the next 2 candles. Remember, like about 7 more after finishing the fair value gap. So first you establish your daily bias using what we just discussed, go down to the 5, wait for the accumulation, wait for that IFVG to form, and then take the trade. It's literally that easy, right? Take profit, write this down as well. But take profit goes at the liquidity that formed before the accumulation, right? And then you manage it at the accumulation. And if it's about 1 hour at the accumulation, you can either close the trade if you're going for the consistency rule with your funded accounts, or take partials or do whatever you want, right? And that is pretty much it. That is the entry model, right? Nothing else to that. I'll let you write that down. Yeah, I'm live right now in an airport lounge, which is pretty cool. This is like a bucket list thing I wanted to tick off, right? Right, now, risk to reward ratios. Risk to reward is simply how much you're risking compared to how much you make on a trade. So if you basically want that number to be 1 to 1. So like this example here, that's about like 2.5, but you want it to be 1 to 1. So the math stays in your favor in the long term. So for example, if you risk 100 to make 90, your RR, your R multiple is 0.9. So you're making more than your risk, you're making less than you're risking, which is negative, right? Which means you're still slowly bleeding. Whereas risking 100 to make 100 at least or more keeps your equity curve healthy and sustainable because you're making as much as you're risking, or you're making more than you're risking, right? Now, when I say that, the goal isn't to catch like massive like 3R trades and like 5R trades every single day. It's stacking those clean, repeatable, small wins, especially when you're funded, because they have obviously the consistency rule and stuff. So even if you're catching like a 4-hour trade, you're just doing yourself like, you know, you're doing yourself in, really. You're not doing yourself any favors by doing that. So go for like 1 hour. 1 hour's enough, honestly. With prop firms especially, you know, that, as I said, that consistency rule matters more than the big wins, because one oversized trade followed by small ones can mess up your payouts. You know, you won't, it has to be like 20 to 25 on the one phase. You have to get about 25% consistency, right? And that's why aiming for roughly 1 to 1.5 hour per trade per day is smarter than swinging for the fences, basically, right? So make sure with your risk to reward ratio, you're risking at least as much as you're making, or you're making slightly more than you're risking. And yeah, that's pretty much it. Now, with back testing, this is something else we've got to discuss. You use FX replay for this, but back testing is basically just the process of going through historical charts and replaying them as if they were live, so you can practice your entries, your bias, your execution without risking real money, right? That's it. It's just exposure therapy almost. You're just speeding up the whole process, right? You know, you can look for setups in a short period of time instead of waiting days for one trade to form. So yeah, use FX replay for this and watch a quick YouTube setup guide. It's pretty straightforward. Just literally FX replay themselves. They have a YouTube channel. Just search them up. Just FX replay full guide. Pretty straightforward, right? Now, forward testing, just another definition for you. Forward testing is literally just like if you went and looked at the charts on Saturday today. If you went and looked at the charts on Monday, right, and traded that day, that's forward testing. It's just testing as it comes, as you trade, as day by day goes, rather than back testing, which is going over like the historical data and stuff. Now, something else we need to clear, which, you know, not many people discuss, is a demo account is actually better than like a small live account. I know a lot of people like to trade on like $100 or £100 account or £200 account, but it's really just, you know, it's not really worth it. And here it says why. So a demo account is always better than a tiny live account, because, you know, when you're learning, you're trying to develop the skills. You're not trying to make 12 quid. You're not trying to make £2.50 profit on a 100K account, right? Small live accounts, basically, they just, although it feels like it's real because you got like your trading psychology still and stuff like that, it's just so pointless because it's not adequate. It's like £2.50, right? You're making £2.50 a trade. No one is comfortable with that. Everyone will just want to make more. So you're gonna gamble over risk and chase wins because the money feels insignificant. Whereas on a demo, it's none of that, which is right. That might be a negative thing, especially when you're trying to passive funded. But on a demo, you can focus purely on that execution, right? The risk management and the consistency without the ego or desperation to try and catch a winning trade. That doesn't creep in when you're on a demo account, right? Which is a good thing at the start. Once you've got the reps in, you can start going for fundeds, which costs like £5 at minimum, like £9, I think. On the 5%ers, they do like £9. A lot of people have been getting that over Christmas. But yeah, anyway, demo account, way better than like small live. Journaling, another pretty self-explanatory thing. Journaling is what turns random trades into actual progress. If you're just taking trades, just, you know, doing whatever you want, even if you've got a clear entry model and you're just taking trades and not even putting them anywhere for you to refer back to in the future, you're not actually tracking when you're making mistakes, right? Especially when you're suffering with like bad psychology, or you're just, you know, you might even think you know what AMD is or IFPGs are, when in reality, you're taking these trades, you're clueless, they're completely wrong, but you have no idea because you're not journaling them. And especially the feedback loop of journaling, like, you know, a lot of people in the course, or a lot of people just even in the DMs on Discord, just send me their journal, like, or send me some trades, like, hey, what do you think about this? And I'm like, your AMD is completely wrong. How would you know if you didn't ask me? How would you know if you didn't journal? How would you know what you're doing wrong if you're not looking back on your trades and seeing how they played out, why you took this entry, what you were thinking at the time, right? Journaling, very, very, very straightforward. But a lot of people lack it and struggle with it. I used to struggle with it. That's why I have the stream journal. Like, having people watching me held me way more accountable, because I was at a point in my life where I was like, what is the point in journaling? I don't need to journal, I don't need to improve, I'm doing fine. But I was like, I do need to improve, and I also kind of want to show people that, you know, I can trade. So I was like, let's do the stream journal. That held me accountable, and now I journal all my trades consistently again. Right, now, fundamental analysis. How to do fundamental analysis. Fundamental analysis is about knowing when not to trade just as much as knowing when to trade. Because most random losses, they'll come from walking straight into a trade, not checking the news, and then news hits, you lose the trade, might even lose more due to slippage and stuff, and it's just never really pays off. So you need to check that news every single time. Always have Forex Factory open, always have Twitter or X or Financial Juice, whatever you use to learn your fundamentals, have that open. And stop trading 5 minutes before, 5 minutes after high impact news. Now, if you're looking on Financial Juice because there's a speech going on, you want to basically on Financial Juice, they'll have like a red label like attached to like the big news event. So if Trump says like we're invading this random country, that's going to be red news, right? Whereas if he just like talks about like McDonald's or something, McDonald's stock might go up, but that's not really that important. So it'll just be like normal news in a sense. So that important stuff, red news, right? That's what you want to look out for. When there's a speech going on, look at Financial Juice. And when there's a speech going on, wait until like 5 to 10 minutes after that red thing has appeared, and then you'll pretty much know it's over. I usually wait half an hour for speeches. I don't really trade speeches because it's very unpredictable, especially with America at the moment. But yeah, pretty straightforward, right? Forex Factory open, check it first thing. We do this on the streams. First thing before we ever look at the charts, unless I completely forget. First thing you do, check fundamentals every single time, right? Now, you can also use these releases to form a weekly bias, right? So you can check CPI for this pair, you can check CPI for this country, and it will, give you a bias for the pair, right? For the week. Now, it doesn't necessarily hit straight away. It might get an initial reaction, but you won't get like that whole momentum. It might go straight back down or straight back up. But the, overall reaction will show after a week or so. Now, the fun part, picking a prop firm. Before we do this, you know the score, guys. Like the stream, get some W's in the chat. We're gonna give away another 10K account here. Excuse me, my mouth's getting dry. All right, let's get some W's in the chat again, guys. Come on. Let's get some W's in the chat. Like up the stream if you haven't already. W in the chat, guys. Come on. W in the chat. We're going to pick a winner now. Let me slap you on the IG story. Why not? Let's get it, guys. We are live on YouTube. Start that again. Let's go, team. We are live on YouTube right now. In the airport lounge, chilling. Let's get it, guys. Keep these W's coming. We're gonna pick a winner just now. Gotta slap you on the story, you know the score. Right, like the stream, get some W's in the chat. As always, this is my phone, this is where the chat is. This is me looking at the most recent message on the chat right now. All right, gonna look away. Remember, spam some W's. Gonna pick a random winner, and that winner, all you gotta do is literally just message me on Discord. So add me on Discord, add me on Instagram, message me, send me a screenshot of your comment, send me a screenshot of the account, whatever it is. Send me a screenshot that you've liked the stream. Just message me, and you can get your account. All right. So keep them coming. This is me looking at the chat right now. This is me looking over here. 5, 4, 3, 2, 1. Okay, let's do that again because I stuttered there a little bit. I don't want that to look rigged, right? That's me looking at the chat, looking away. 5, 4, 3, 2, 1. Tendai. I can't pronounce that name. Let me put that in the chat. Let me put that in the chat. I can't pronounce that name, I'm sorry. It was the same person as before as well. I couldn't pronounce it and then I stumbled and then that's why I left it. All right, this guy, message me. I've just put your username in the chat. This guy, you see that? I want that guy to just confirm Tendai. What's that? There we go. You've seen it, right? You've seen it. Message me on Discord, Instagram, whatever it is, and I'll give you your account. Now, picking a prop firm. This is the same way I pick the account that I'm gonna give to you. All you need to do is use prop firm match to compare firms properly instead of just picking the cheapest challenge or whatever, as we discussed, right? So propfirmmatch.com. There's a few other ones, but these are the biggest ones at the moment. Propfirmmatch.com. I'm not affiliated with them or anything. They've tried, but I've actually tried quite a lot. No, propfirmmatch.com. Go to them. This is how you're going to use it, right? This is how you're going to pick the firm. You want to look at the stuff that actually impacts results, like their payout rules, their consistency rules, the drawdown type, daily loss limits, new rules, and whether they're known for messing people about. You can look at the rules, all that kind of stuff. You know, but you need to do your own due diligence because the best firm changes depending on how you trade, right? Now, what makes a good prop firm? This is how you use that website, look for those certain things. You know, you can look for cost and all that stuff, but you need to look at this first. So a good prop firm usually sits in the middle rather than being the absolute biggest or the tiny brand new ones, right? The largest firms, they often have the least room to grow and the most payout pressure, which can lead to stricter rules, slower processes because they're constantly trying to control that outflow because they're quite a big firm, right? Like I know Alpha Capital Group, they do strategy calls. So if you get a payout that's pretty much any size, but you know, bigger than like a few $100s, they will hop on a call with you and they want to see your back testing. They want to see that, you know, you're not gambling. They want to see everything. They want you to describe your strategy to them and they confirm it, and then they can confirm the payout. Now, on the opposite end, very small firms are risky because only a few successful traders getting paid can genuinely hurt their cash flow. The sweet spot is a firm that's growing, right? So in the middle, one that's growing, that's been around for at least a year, has a solid track record, obviously, but still has room to expand without choking people with unnecessary restrictions. Think of it like a house filled with water, or filling with water, right? A huge firm is already close to choking people, is already close to flooding, so they tie in everything to slow the water, right? It's close to flooding. This is the roof. This is where that big firm is, right? A huge firm, already very close. A tiny firm only needs a couple more buckets to overflow because their roof's like all the way down here. But a mid-sized firm is like growing like this. So as they're getting more and more traders, their roof's getting higher, right? It's still growing. So it's stable enough to handle payouts while still being flexible. So use that. That's a pretty good strategy that not many people tell you about. That's how you can pick the best prop firm to trade with, right? Not just one that you know, someone's affiliated with or whatever, right? Now, how to actually get funded. So getting funded isn't about rushing into a challenge when you feel motivated. I want you to look at these rules first before you go for a funded challenge. Now, a lot of people go for a funded. I used to do this. I'd go for a funded, I'd blow it, and then I'd leave it for a few months because I'd be scared off, right? What you need is evidence first. So you need at least 100 demo trades, at least logged, with a proven win rate. So you actually know your edge works and you're not guessing under pressure. Now, when you move to a funded challenge, so that's just the requirements to go for one. When you move to one, risk management changes slightly, right? You want to be a bit more aggressive, especially if you have a bit more money to play with. Risk around 2% per trade while you're in profit. But if you take a loss, drop back to 1% to protect that momentum and avoid emotional revenge trades. Treat the funded attempts like a planned process rather than a one-off gamble. So you literally set a monthly budget that you're comfortable losing, divide it into 4 attempts, so one a week, super worst case, but 4 a week. I want to make sure you can pay every single time. Keep going methodically instead of going all in once, right? So instead of, like, if you have a $200 budget, instead of going for like 100 or a 50K one phase, literally go for like 10K, 25K phase, right? Or 25K one phase, and just do that and risk 2%. If you win, keep going. If you lose, go down to 1%. And when you blow it, or if you blow it, go to the next one and buy that straight away, or, you know, give it a few days to recover so you're not getting messed up. And then, yeah, just keep on going, keep that consistency up, right? That is pretty much it. So we're at the end of the lecture now. Hope you enjoyed, right? Where do you go from here? So from here, execution, pretty self-explanatory, but execution beats theory every single time. You can watch videos and take notes for months, but nothing changes until you're actually on the charts trading. Now, for the people in the course, you'll know exactly what I'm talking about when I say explicit and implicit learning. There's like that curve. As you learn more, like watching these streams, watching videos and, you know, taking notes, as you learn more, you need to do more and more practice. And it gets to a point where you stop watching videos completely and you're just practicing all the time. And that's when you really start getting better. So right now, you've done a lot of explicit. You need to go and do some implicit as well, which is applying it and building that intuition, right? And that's pretty much it. So the people who improve are the ones who turn this information into reps and practice, not the ones who keep waiting until they feel ready, because inevitably, you're never going to feel ready. You've got to keep going, right? Now the giveaway, we've done some funded accounts already, but let's do another one. Let's do another 10K. Spam some W's in the chat, guys. You know the score. I'm going to pick another winner now. Like up the stream. Let's do an announcement for this one as well. Let's get some W's in the chat, guys. Let me just make this announcement. Right, like up the stream, subscribe, get some W's in the chat, keep them coming. Just made an announcement. We'll give it a couple seconds. Like up the stream, guys. Right, when I'm in Bali, obviously I'm traveling right now, but traveling to Bali right now. When I'm in Bali, what we're gonna do is we're gonna do another one of these, a bit more in depth, a bit longer, maybe like 2 hours long instead. But this is like the first one, just giving everyone a bit of a taster, right? It's, you know, just the information, bit of information, bit more value. The next one is gonna be the proper one where we have real-time examples, the engaging one, the proper one that we've done the past few years. Like up the stream, get some W's in the chat. We've got about 10 seconds, then we're going to do another one. Right, guys? Right. Let's get it. W's in the chat. We're going to do a giveaway, and then I got another little announcement for you. So, again, this is me looking at the chat, right? This is me looking at the camera. This is me looking away. 5, remember, the winner, all you got to do, DM me on Discord, DM me on Instagram, and we'll sort your funded account out. 5, 4, 3, 2, 1. Didn't even use my fingers there. Ready? Mr. Ali. Mr. Ali 4141. If you want a funded account, sir, give me a message. Mr. Ali 4141. You've won a funded account, sir. Give me a message. I need you to confirm you've heard that. Then we can carry on. So that's Mr. 1989 Max, Hyundai, and Mr. Ali 4141. A lot of Misters, right? Finally, there we go. You've confirmed, you've seen it, confirmed it, all good. Now, very quickly, before everyone disappears, that is the end, right? Oh. That is the end. I do want to say, what I'm launching is group trading. So I do streaming, I do stream trades. You can see it on my YouTube channel completely for free. Now, if you go to the link in the description, we're taking applications for group trading, right? Which is one-on-one with me and with other members in the mentorship, other funded members and stuff like that. One-on-one group trading. Click the link in the description and you can see that, right? You'll be able to book a call, see if you fit in, and that's it. All we're doing is checking out your your trading skills. So if you know what AMD is, you know what IFEGs are, you know the basics, and you're trying to take it to another level, that is the thing for you. So click that, click the link, apply for a call now, and that's that. Just wanted to get that out the way. Group trading has been launched, where every week we're going to be doing London and New York group streams with up to 10 other people, no more, 10 people at most, click the link in the description, apply, book a call. We'll see if you're a good fit. Book a call with my business partner. We'll see if you're a good fit, and we'll go from there. Other than that, I do want to say one other thing. We're starting London trading streams, right? So obviously I'm going to be in Bali, which is 8 hours ahead, which is like 11 p.m., 10 p.m. for the New York streams. So instead of that, what we're going to be doing is we're going to be doing London streams. So if you go and click off this, go and look at the live stream stuff, go and look at the live streams on my channel, you will see we are doing London streams. There's one scheduled already. Go and click the bell on that one, like that one up. But yeah, if you want to join group trading, if you want to trade with me and other funded mentorship traders, click the link in the description, and that is pretty much it. I'll enjoy my flight. I'll see you all very soon for the London stream, and we'll go from there. Click the link in the description, apply to group trading with me, with other members. I'll have a chat with my business partner, and we'll see if you're a good fit. Thank you guys. Have a lovely rest of your day, and I'll speak to you very, very soon. How do we end this stream now?